Ladies and gentlemen, good day and welcome to Bikaji Food International Q3 FY26 earnings conference call. As a reminder, all participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. I now hand the conference over to Mr. Ambesh Tiwari. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining the Bikaji Foods International Q3 FY26 earnings conference call. From the management team, we have with us Mr. Rishabh Jain, CFO, and Mr. Manoj Verma, COO. I now request Mr. Rishabh Jain to take us through the key opening remarks, after which we will have the floor open for question and answer round. Thank you. Over to you, sir.
Thank you to all the investors and friends. So largely from this quarter perspective, this quarter is the story of two halves. So in October, where we have seen some pre-pon of Diwali this year, so we've seen sweet business being in negative growth this year. But overall, when we see a core business, which is ethnic snacks and Western snacks, so ethnic snacks has grown at close to 13.5%, versus Western snacks grow 20% plus growth. So we've seen overall snacks category growing at 14% plus in this year. And we also seen some early sign of GST benefit, which government has passed on in September month. So we are seeing good volume growth also in ethnic snacks and Western snacks overall. So we're seeing good sign in our core business. That's what in this quarter. And also January is going on, and we are seeing some good results also in this quarter also. In this quarter being also, we done some two big campaign, which is regarding with respect to Bhujia. So Bikaji Bhujia to Bikaji campaign, which we started in September month and ran in this full quarter, and has given a very good result in a Bhujia category in our traditional snacks category, which has grown at upward of 16-17%. Also, we have started one specific UP campaign, which is Kya Baat Hai Ji, which has started in December month. And it's early to say, but yeah, getting good result in UP. From bottom line perspective, we're seeing gross margin at a steady level at close to 35%, which is including PLI. But yeah, overall, we're seeing gross margin 35%. Ad cost, of course, this October month is always big on ad quarter, ad cost. And so our ad cost was close to 4% in this third quarter. So our EBITDA is close to 12.5%. But overall, we're seeing good operational efficiency, as well as GP has remained stable in last 2-3 quarters. From raw material perspective, we're seeing stability in all key raw material except peanut, which we are seeing some uptick. But overall, peanut is not so big in our overall portfolio. But yeah, all the other raw material has been stable, and we have started doing long-term parking of each key raw material because it's a peak season or peak crop season. So overall, next 3 to 6 quarters, what we see some stable growth, being we are at low utilization as of now, 52%. So we've seen early sign of good recovery due to GST and good demand uptick. So we see at least 14 to 16% growth in our core category. That's what overall. From investment perspective, we are doing some. We committed close to 131 crore rupees of investment in the Hazelnut factory last year. Out of which 60 crore has been invested. We have taken 40% stake. We are putting additional 40 crore as per agreement this year, and we have taken the approval from the board also for this. And after this, our overall stake will be close to 48%. And also we have done JV with TK Khalil. TK Khalil is a big name in Middle East, having more than 4 decades of experience in bakery category. He's made some big business in bakery in Middle East, and we are tied up with him and formed a JV where he will be having 30% stake and we will be having 70% stake in our company in Bikaji Bakes, separate company under Bikaji. And that's a futuristic investment, but yeah, we see that it can become 100 crore business, because now all the children and all new TG normally see this business as a big business, and we also had done some investment in this. Overall, from 9 months numbers, so our gross margin is close to 34.9%, with EBITDA is 14.2%. Our revenue from operation, if we see, this without PLI, we've grown at close to 14% revenue from operation at console level. From distribution perspective, Manoj, you can.
Yeah, so in terms of distribution, and which is what is identified growth lever, so we continue to grow. If we look at in terms of our overall reach as Bikaji, we are now close to 1.4 million outlets, and in terms of our direct reach, we are now at about 3.35 lakh outlets directly. The marketing campaign which Rishabh just spoke about, so what we had identified was that we need to infuse something so as to accelerate the growth in Bhujia category. With that in mind, we started a campaign, Bhujia Ho To Bikaji, which has given a good and excellent dividends in terms of increasing our reach and increasing the consumption, both resulting into our overall Bhujia growth numbers, which was primarily focused in our core states. The other campaign, what we also did was we roped in Mr. Pankaj Tripathi as the celebrity, and this was more towards UP and nearby markets. Kya Baat Hai Ji, that's the property campaign which we started. This was in the later half of Q3. So it's too early to comment, but that yes, the initial reach and the responses what we are getting is very positive, and we are very confident that this should help us build Q4 and thereafter business for us. So we went on to multiple communication vehicles and very aggressive on digital media on this stuff. Another big thing which has happened in this quarter is what we have relaunched our logo, Bikaji. So the one which we have is more vibrant, it is more enticing, and this is a refreshment of our old logo, and effective this calendar year, we have now moved on to this new logo, which is also there in the deck of ours. Growth, if we look at, so Q3 volume growth, so this is supported by the GST stuff, so volume growth picked up is for the quarter was 8.4%, and ethnic snacks, western snacks did extremely well, so was Papad. So if you see, there's two contrast pictures that where it was up till H1 and now what was Q3. So this Q3 performance has led YTD performance moving up. But to underline, ethnic snacks and western snacks have done very well, and things getting back on track. On a YTD basis, if we look at, so now ethnic stands close to 10%, and western snacks is 6% above, which in H1, if you look at, was a concern which had come up, was pretty low, but this is in this quarter it was is made up for the first half. Sweets, of course, was low, and that we had explained in our earlier calls as well, that it is always good to see Q2 and Q3 put together. So this was early Diwali, hence Q2 numbers were high, and Q3 was a negative growth. But on a YTD basis, if we look at, sweets is again on a positive stuff, and a growth of 8.1%, while Q3 was a negative stuff. Now, this sweets and gifting category has impacted the growth of focus states, because the contribution of these two categories in focus and other states is very, very high. So just to put a number, and this is if in the core states it is 7-8%, in other states it's about upwards of 30%, and in focus states upwards of 25%. So when these two categories, because of Diwali, got shifted, so therefore the growth of focus states or other states looks muted or negative. But if we net off sweets and gifting, the growth for these two state categories is also in line with the core state. Exports is done very well. This is now the results what we are getting for the investment made in the yester quarters and years. That is about building our capacity, wherein we invested behind Ariba Foods, scaling up our capability on production for the frozen items, which is most salient in these markets, and also our people investment, what we did in the exports market. We expect this exports growth to continue, and for next 2-3 years, we should be witnessing same kind of growth. Family pack and impulse pack is again, if we look at family pack, looks weak in this quarter. This is on the back of the gifting and sweets, which is primarily large pack only. There's nothing small pack in that. That is impacting, that makes this picture bleak in terms of family pack growth. But if we look at traditional snacking growth, so we have grown higher in family pack than the small packs.
So overall, from retail business perspective, so our retail business has grown at 86% growth. We have in quarter 3, being it's the biggest because Diwali is big, and for THF as well as for Bikaji, Diwali and sweets gifting is very big in retail stores. So we delivered 47 crore rupees business from 23 stores as on date, and the target is to open at least 10 stores next year in THF as well as in Bikaji. Overall, from revenue perspective, revenue has grown close to 11% with EBITDA growth compared to last year, quarter 3, ignored 77%, being increase in EBITDA margin compared to quarter 3. That's apart from the presentation. We are happy to take all the questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Nuvama Institutional Equities. Please go ahead.
Thanks. My first question is on dry fruits and nuts. So consumer treats dry fruits and nuts also as a broader part of the snacks category, and clearly consumer is focusing more on health. And we have seen many companies create big business. For example, Tata Consumer, already 250 crore ARR in nuts they have created. What will be your thoughts on this? Because this is a very low-hanging fruit, because part of the same broader snacks category. Any thoughts on this? Have you tried this at any point of time? Any pilot projects you have done in this?
So if we look at into the mass category, so this is not mass, this is niche and the top of pyramid. If we look at in terms of just the dry fruits, so that's a commodity. But yes, when you do process this stuff, that becomes the snacking part of it, which is actually 2% of the overall snacking category at this point in time. So we also do have some cashew nuts and these the nut stuff, but that has not been our focus thus far. And in near future, this is not our priority, because this is importantly on some few channels where the premium products could be sold. So our focus has been more on the range of namkeens and bhujia.
Sure. One follow-up on the core versus focus. My question is, why is sweets and gifting higher in focus market? Is it easier to do that, especially in a new market? What is the reason?
No, so two reasons, Abneesh. One is that the play of modern trade is very high, because by virtue of our modern trade presence in all these states, Reliance and DMart, so we are over-indexed in these states. And because modern trade does very well in all these stores, so therefore our sweets and gifting goes very high. So this is the reason that our contribution of sweets and gifting is very high in focus and even high in other states.
So my next question is on your overall advertising strategy. Generally, we don't see two brand ambassadors in the same category in the same geography. So Amitabh Bachchan, till when do you have him as the brand ambassador as per the agreement? And what is the specific reason for having in the same geography Pankaj Tripathi as the brand ambassador for Namkeen? So how does it help? Is it a long-term transition from Amitabh to Pankaj Tripathi? Is that the reason?
No. So one is that not same geography. If you look at Amitabh Bachchan is our brand ambassador nationally and internationally as well, and will continue to be our brand ambassador. We have extended his contract for another 2 years, so that's one. Pankaj Tripathi, we have roped in for a campaign basically. So these are, the geography specific which would be doing. So not that in UP we are not using Amitabh Bachchan as our brand ambassador. That is it. But for specific, Kya Baat Hai Ji is we also engage with one of the known agency. So this is Ogilvy we have worked with, and we have done this now as a campaign. So this does not impact anything with what Amitabh Bachchan has been doing or would continue to do in that stuff.
But I didn't understand what was the need.
So no, point is that Amitabh Bachchan helps us do all category, right? Now getting one ambassador, brand ambassador for specific stuff, so he's a generic overall stuff. Pankaj Tripathi we roped in because this connects more closer to this geography, to the masses and the TG what we are looking at. So basis research we figured it out. The options were, one, we could have used Amitabh Bachchan. So one is the overall broad messaging and then focused for particular state. Instead, the option what came brighter was that we have a different celebrity, but this is nothing to do with replacement of one over another.
Sure, thanks. That's all from my side.
Thank you. The next question is from the line of Rayan from Trinetra Asset Manager. Please go ahead.
Good afternoon to the team, and thank you for giving me the opportunity. So I have a couple of questions. First of all, the distribution strategy side. So direct distribution reach has increased to 13.9 lakh outlets as of December 25. So from here, should growth be driven more by higher throughput per outlet or by entering new micro markets? And how should we think about the margin impact of it? This is my first question.
Yeah, so growth has come both. So it's a two-pronged growth strategy. One is that continue to drive growth, which is more if you look at in terms of our core states, because that's where our numeric distribution or our reach is already at on a higher level. So there the growth story is more about throughput of store. In the focus and core or the focus and other states, it is both that the stores where we are, they will grow, and the inorganic growth in terms of new stores where we were not present earlier and as we reach in that stuff. Now, talking about the margin impact, so yes, we make better margins in our core states, and there increasing or driving growth from throughput helps us mitigate for whatever when we expand more in our focus states. So overall, there's no margin impact in that stuff. This is a thought through thing what we do.
Okay. And just continuing my first question, and just more focusing on the margin side. Like right now in quarter 3, your family pack continue to contribute 62% of revenue with impulse pack at 38%. So if impulse packs start growing faster in non-core markets, so should we expect any margin or working capital pressure from a mixed perspective?
No, so it will not have a major impact because of a gap between family and impulse pack in overall gross margin is not more than 2% in ethnic snacks category to 2. So if our what we see that in next 2-3 years this 55-45 should become, so family should become 55 and 45% should be impulse pack. So it will have less than 10 to 20 basis point impact, and we are doing multiple things to improve it, built on efficiency and overall pricing strategy. So this will offset this. So we don't see any major impact if impulse pack goes up to, and we want to improve our impulse pack contribution, being it's a trial pack to in a focus state.
Oh, okay, fair enough. And like the last one more bookkeeping question, like I want to understand regarding marketing intensity has increased with multiple regional campaigns and ATL and BTS brands. So what, as per management review, what internal metrics such as volume uplift, repeat purchase or outlet productivity do you use to assess ROI, and in what time frame do these campaigns typically break even?
So these are multiple steps in it and multiple vectors if you look on this. So one is, the first and foremost is that we look at the efficacy or effectiveness of the campaign. So there are reach agencies which gives that what was the viewership, how many viewed, and how many did it multiple times. So that's the power of campaign, that how has it gone below. But this is all, this is nothing to do with numbers, just how the campaign has gone. While this has a correlation with our numbers in terms of that your productivity, sales team productivity starts going up, which means that there is some demand creation, or which could be a new entry, and also in terms of repeat purchase or the throughput of the store. So both ways, this gets measured. So one, to the marketing team, they have a KPI to deliver, and similarly, in synergy, sales team is to deliver KPI in terms of that how many new stores, how many, what kind of productivity and throughput it has. So those are the measures what we track, and then we call out that was it successful or not, or should we repeat it or not that.
Okay. That's it from my side, and good luck for your coming quarter.
Thank you. The next question is from the line of Harpreet from Global Consultant Research. Please go ahead.
Yes, so thank you for this opportunity. My question is regarding the stock run out. Like, this has been a serious issue for the company for some time now. Like, for some retailers, they do not purchase on purpose and wait till the 24th of a month, which causes stock run out, and as a result, loss in real consumption. So what has the company been doing to deal with this?
Can you be a little more specific on this question? I mean, I'm so sorry, couldn't understand well.
Like, for some retailers, they do not purchase on purpose, and being aware of the fact that discounted prices will be available from 24th of a month, which leads to stock run out, and as a result, loss in real consumption. Like, customers are not able to buy due to unavailability of products. So what has the company been doing to manage this?
Yeah. So one is that it is not that 24th onwards there are schemes. The scheme starts on the 1st of the month itself. That is one. Also, none of the retailer, because if company loses something, that's a sales loss to the retailer as well, right? So that's not the case. But what happens is that whenever any schemes are anticipated, unless you're talking in specific to the GST, when announcement was to happen, right? So till 23rd, people were waiting that now the post GST rates will come down and then they buy. So even at that point in time, it was not that sales was zero. What happened was that these retailers started destocking. So let's say, giving an example, if a retailer keeps, say, 20 pieces or 15 pieces of one particular SKU, so that point in time, he brought this inventory down to 5, 6, and he did not purchase in anticipation of that, the rates, GST impact benefit will come, and then I'll buy again 15, 20, whatever. So that was a momentary stuff. Otherwise, in FMCG space, this is how it works, that round the month or all 4 weeks, there are purchases, but yes, always, you look at week 4 becomes little high, and week 1 are high, 2 and 3 are the regular servicing of that stuff.
Got it. And like, the Nepal JV is expected to start production in a year, and in the ethnic snacks category, which is a core category, and we aim to become among the top 3 players there and gain high single-digit market share. So what is the progress there?
So largely, from Nepal perspective, our plant will come up in close to next 8 months largely, and we will start working with CG Group in maybe by end of this financial year. So we are hopeful that they are a big group there, and we're having good distribution. So in next 2 to 3 years, we'll be having at least top 3 players in Nepal. That's why we've done a JV with them, and that's what our aspiration is with them.
Okay, thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Nitin from MK Global. Please go ahead.
Yeah, thanks for taking my question. Hi, Manoj. Hi, Rishabh. Can you please help us understand the monthly revenue trend? Like, I want to assess how the GST rate cut is aiding demand, and also want to know your view on the GST benefit aiding demand ahead. Like, how you think the GST rate cut will help overall improvement in the growth trajectory? That's the first question.
So, largely what we've seen that you see our core ethnic snacks in first half has grown at 5-6% versus this quarter, the third quarter, has grown at around 13.3%. And we're seeing good uptake in family pack as well as impulse pack. And that's what we see the result of some GST input benefit what we've given. We've done some MRP reduction, so it's more affordable to consumer, and also some grammage increase in impulse pack. So we see some, also there is possibility that there are smaller players who are largely doing not a business in a much more professional way. So we get the opportunity to do at 5% GST. The chance of doing that type of business will be limited. So we've seen some benefit of due to this also. So overall we see that and you'll see a volume growth also in traditional snacks is close to 11-12%. So we're seeing some good results after the GST rate cut, and this will be continued in coming quarters.
Yeah, this is really helpful. I just want to know, like, December would be the clean month with GST benefit. Any sense you can provide on, like, how would have been the growth in December month, if you can?
So, Nitin, if we were to look at, in terms of ethnic snacks or the Western snacks, so immediately after GST, so complete, even in October also, these categories did extremely well. So it is only, on account of sweets and gifting that October was a weak month in terms of overall company. But GST benefits started reflecting or coming in October onwards. So it is not that it has only come in December, but the good thing is that the momentum continues. So what it was, like September end, there was a little confusion, chaos around that GST will bring the rates down, and so the purchases were on hold, which someone took up as a question as well. But this picked up October onwards. So all 3 months, our growth has been by far high than what we had delivered in the earlier yesterday quarters.
Thanks, this is helpful. And do you expect, like, further acceleration in growth possible?
So I think, see, now it rests on overall category growth as well, but momentum is good. January, almost is about to get over. We don't see any disruption or look back on this stuff.
Thanks, this is helpful. Second question pertains to your gross margin. So, like, despite relatively weaker mix, where packaged sweet salience down almost around 900 bips QOQ, I am talking sequentially, our gross margin correction has been limited to only 40 bips. So can you help me understand, like, what other factors are helping to keep the gross margin stable on a sequential basis?
So we have seen good growth in our core product, which is Bikaji Bhujia, and that's highest in gross margin in our ethnic snacks. And we've seen good growth being done two campaign around this, majorly Bhujia to Bikaji campaign. So we've seen good growth in Bikaji Bhujia, and that has overall has been improving gross margin. Also the product mix, what we're trying to improve on focus product which are high in gross margin, and we started this 2.5 years back. So that has also worked well with this.
Okay, so it is largely to do with the Bhujia. That's basically helped us. And lastly, the core market growth at around 8%. So, like, how should we see this growth shaping up ahead?
So, growth, if we look at it now in terms of our markets, basically, so as we have said that the focus would be growing higher than what the core markets are. But for now, if we look at in this particular quarter, focus looked weak because, as I explained, in my earlier statement, that there is a huge play of sweets and gifting, which got shifted in quarter 2. Otherwise, other than sweets and gifting, if we look at, so the growth of focus and other states is also in fact ahead of what core has delivered. So going forward now to your question, focus will be growing, higher than what the core states would grow.
No, so this is helpful. Thank you and all the very best.
Thank you. The next question is from the line of Shirish from Motilal Oswal. Please go ahead.
Hi, Manoj. Rishabh ji, thank you for the opportunity and good afternoon. Manoj, just one quick question. When we entered the quarter September and every industry player was very excited with 5% GST and shift which was expected. But when I look at 9-month number, I think the focus market has grown only 10.2%. The reason why I'm asking is that I'm sure you are not happy with 8.4% volume growth. So two things. One is that you said there is a GST benefit which you have passed in terms of higher grammage. So if you can split that 8.4% volume growth, what is the percentage or what is the contribution has added because of the grammage addition?
Sure.
So Shirish, so largely from increase in grammage in quarter 3, what we did due to GST. So it has helped in improving volume growth of 1.5-2% in overall. Yeah. But overall, you will see that our overall volume growth in ethnic snacks and ethnic snack category or overall snacks category is close to upper 12-13%. So that's high in last 3 quarters, and that's what we targeted.
Okay.
And anyway, it did impact in our sweets business because that was same. So papad and sweet stayed same. It was only in the snacking space.
Okay. The other thing which is the observation that in quarter 2, not you, but most of the players said that there is a destocking because there was a confusion about the GST will happen and other things. But did you really get any benefit of restocking in the trade in quarter 3? And again, is it settled or it is still ongoing?
Okay. So Shirish, for the impulse category, no one would wait for, this thing. So the opportunity loss or the day loss is a loss. However, from consumption standpoint. But yes, if you look at in terms of destocking, so yes, there was certain impact, but then that got over in a week's time itself. Thereafter, it's an ongoing replenishment model, so weekly servicing, weekly buying in that stuff. But yes, whatever consumption loss happened during that time, that the outlets who ran out of stock and all, so you cannot replace that stuff.
Okay. The other thing which I I'm reading from slide 20 from your presentation. When I compare 9 months growth in the focus state, which is just about 10%. I'm giving the benefit Diwali's come here or there or festive season would have shifted. But in 9 months, we are still 10% growth is it much lower than your expectation? And how much growth we can expect? You did allude saying that the focus state will grow faster. But I think what are the issues?
Yeah. So Shirish rightly said that 10.2% growth is not a good growth in that stuff. It will not be less than 15%. 15-17% should be the bare minimum growth in that stuff. The disruptions, when you talk about, so that because of GST, because of the sweets could have done or the other categories could have done even better. This is what in the Western snacks, which again is a higher contribution in focus in core state, in focus in other states, was weak in quarter 2. Those were the stuff. But if you look at that, how it is made up, in rest of the categories, so namkeens, Western snacks and all. So it is again coming back to what in line for what we have said or in line with our plans what we have.
I have a specific question, Manoj, here. Out of 6 markets which we have identified in focus state, specifically UP is a very large snacking market. So could you strip off what is the growth you are seeing in particularly UP?
So UP is on a high growth in that stuff. So if 10% is the overall growth, so UP is close to about 14% growth in this stuff. So it's on a high side. There's one market now, Delhi, which we call as our focus state, has not done very well in that stuff. And we also did not invest as much in Delhi. So there's no specific campaign or something what we have done for that stuff. But to your question, yes, UP has done better than the overall focus states.
So UP would be growing on an average about 50-60 crores a month now?
No, Shirish, what? Hello?
Yeah.
Yeah. So UP, I said, now if you look at, now would have is about 13-14% growth, whereas overall focus states is 10%.
Okay, got it. And in export, what are the reasons? I mean, I do understand Ariba is yet to contribute meaningfully, but what are the drivers for this growth? Are you opening more markets, or is that core markets in the export is showing you scalability?
Yeah. So Ariba is an enabler, right? You have stocks to sell, right? The second question which you said, that in terms of the expansion. So the driver is expansion, getting into new accounts, large accounts where we were not there earlier. We got listed and there is a good response or demand coming in. So that's the driver. Ariba is the back end stuff, so which is solving for this problem.
So which are the large market in your exports?
So large US, of course, continues to be a large market. US, Canada, then Middle East, these are the markets which have done. So US, in spite of odds like the tariff thing and all that stuff, we did still well in US. Costco is one of the largest accounts there where we were not there, and so we got listed in this quarter, and a very good performance in this store and very good response in terms of repeats.
Okay. Just last question on BBPL. What is the rationale? I mean, I know Khalil is a very big man, but is the company going to diverse and getting into biscuits and croissants and other segments? And what is the scalability of this model? Are you going to get the Khalil brand in India, or you're going to spread more because you're giving a capital also?
Yeah. So Shirish, one, certainly not biscuits, right? So this would have three parts of it. So very premium breads, grocery, and then the third is cakes. These would be the three segments we'll be playing in, and the business would be under, again, three heads. One is frozen export, and everything is frozen. That's one. Second is that the business would come from, we'll export from here. That's what Khalil's presence will bring in, because he is already into this model of that stuff. It is the facility or manufacturing capability we are building in here. So one is export. Second is B2B, right? And the third would be domestic, which will be the least of that stuff. Now, this is a futuristic investment. We have set up our plant in Bangalore. And as Rishabh said, that over 3 years, this has a potential to get us about 100 crores in our top line number. That's where it is. So this will not be, it will be a complete separate team, not that anything to do with Bikaji. This will be run by a professional team, which is more into bakery and all this stuff.
So you mean to say that the existing stores which Khalil is operating in UAE is not a part of this deal?
No, it's not.
No. So this is Bikaji Bake. This is Indian stuff only.
Okay. And this plant, when do you think will get operational? Say another year or so, or will take a little longer?
No. By end of this quarter only it will happen.
Okay. Thank you and all the best.
Yeah, thank you.
Thank you. Anyone who wishes to ask a question may press star and one on their touchtone telephone. Thank you. The next question is from the line of Abhishek from Systematic Groups. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. While you mentioned in your opening remarks on the raw materials being fairly stable, just wanted to check specifically on potato, what is the procurement cost trend that you're seeing in potato? Because I understand that December, January is the period of crop flow and procurement, and you can correct me if that is not accurate. But just wanted to check what is the sort of procurement cost trends that you're seeing specifically in potato right now.
So potato crop has been very stable and good this year. So we don't see any major disruption in price or quantity availability this year. And we started. It's early to say, but early to do. But yeah, in next 2 months we'll do a long-term buying of at least for next 6-7 months. That's what we do normally in February or March. But yeah, price has been very stable.
All right, so got it. That's very helpful. Thanks and all the best.
Thank you. The next question is from the line of Anchit from Goldman Sachs. Please go ahead.
Hello. Am I audible?
Yes, yes.
Yeah, hi. Thank you for taking my question. I just wanted to understand on this Bikaji Bakes, what is the trajectory? Are you expecting revenues to start coming in from FY27 itself? And in terms of the products, in terms of, say, premium breads, etc., is it just going to be export, or is it going to be like in stores, etc., in different stores, or will it be just in your retail stores, in Bikaji retail stores?
Yeah. So to your first question, yes, revenue will start coming in from year one itself. On the product side, so yes, the split of the business, if you look at, would be majorly exports, then B2B, and then few top-end stores as well, so domestic sales. So this would be available in top-end stores because this would be all premium. And also we leverage the e-com channel also on this stuff. So it should be available there as well.
And will this be under the same brand of Bikaji, or how do you plan to brand this?
The work is going on in this, but it will not be under the same brand Bikaji.
We'll announce it shortly before we commission the factory, but not Bikaji for sure.
Okay. No, thank you so much.
Thank you. The next question is from the line of Soham from Motilal Oswal. Please go ahead.
Yeah, thank you, Rishabh and Manoj. I just wanted to check one direct coverage. Right now we have a 334K direct coverage, and last 1 year we have added almost 46,000 addition. So Manoj, if you want to give a ballpark breakup of this 46K breakup of this code versus non-code addition in the last 1 year.
So the most of the addition which has come in is in the focus states, right? So as I speak, so it's about 1.65 lakh outlets is what we are covering in focus states, and core states is about 1.15, and the rest is other states, about 55,000 outlets.
Okay, so majorly it is a non-core addition. Okay. Second.
Yeah, because
Second,
sorry, over.
Yeah. On the impulse pack, right now, if you look the snacking portfolio, so almost 50% of snacking portfolio comes from impulse pack, and in 9 months data, which is grew only 6.8%. So, like for full year, for next financial, how do you look this impulse pack growth for the FY27?
So what we plan to do is that, for us, family pack is equally important, and we get better margins also in that stuff. That also in our core states, this is what helps us store throughput also. In the channels like, say, modern trade, e-com, it is the play of the large pack only. But as we drive distribution, as we drive focus states, and which is where, as I said, that the faster growth would come from the focus states. So that's where the role of the impulse pack. So to your question, what we see that the growth of impulse and family pack will be in line, not that a very differential growth in that stuff you'll see. But yes, impulse would be on a slightly higher side.
Okay. And in this core versus focus market, like as you previously you said that focus, your target could be 15 to 17. So what could be the target for core? High single digit for next year?
No, double digit target. So you will see that about, say, 13% plus minus would be the core states performance.
So 13% plus minus for core, and focus would be more than 15.
Yeah, upwards of 15%, yes.
Upwards of 15. Okay, got it. And the research for this margin, for 9 months gross margin ex PLI, you have done 33.5, and operating margin we have done 12.5. So how do you look for this year and next year for gross and operating ex PLI?
So largely we see EBITDA margin should move up at least 50 basis points from this year.
And for operating? Okay, you're saying operating is 50 and gross will be stable. How is it?
So EBITDA should improve by 50 basis point EBITDA.
Okay, EBITDA is 50. And A&P would be the range of 2 and 2.5, right, for next year as well?
Yes. Yes.
Okay, got it. Thank you so much. Thank you.
Thank you.
Thank you. The next question is from the line of Parshav from Mehta Equities. Please go ahead. Mr. Parshav, please go ahead.
Yes. Yes. Thanks for opportunity, Rishabh. I wanted to understand about the product range. When we are launching the new product, what are the strategies that we are used to see? Basically, I wanted to understand the strategy space that how Bikaji company researching the products to distribution as per the geography.
So this is two approaches what we take. One is the innovation team, the R&D team, which keeps working all that, keep picking up. We participate actively in all food exhibitions, say like Gulf Food, Indus, Ahar, so on and so forth. So which is a forward-looking stuff and ongoing process. That's one. Second is that we also pick that what is doing well in the market, how the category is behaving, which subcategory is doing well, and how are we indexed to the overall category stuff. This is the principle 3x3 which arrives us on where to work on, and that's how we pick up the subcategories that what should be developed, and this is how we get these NPDs out in the market. Now talking about geography, there is diversity across states, and that's how the consumption palette is. So then it becomes region specific kind of stuff, certain things. This is how we do, and this is what is our strategy on adding new products or for new product launch.
Yes, perfect. Thank you, Sirji.
Thank you. Participants are requested to ask a question. Please press star and 1 on their touchtone telephone. The next question is from the line of Janadharan, an individual investor. Please go ahead.
Hello, am I audible?
Yes, sir, you're audible.
Yeah.
Yeah. Hello, sir. I am an individual investor in it. So my only question is, if raw material costs normalize upwards, right, and demand softens, I understand that demand is going to go up, but just this is an hypothetical question. If raw material costs normalize upwards and demand softens, which lever, be it pricing, be it mix, or be it cost, will protect margins the most for Bikaji?
So see, if raw material prices goes up, right? So we'll try to see that what further optimization can be done, because that is one. Then if this would be true for competition as well, we'll closely watch that how competition is behaving on that stuff, and we'll respond accordingly. That's what we do. Because there's a threshold that we would not wish to go below our threshold in terms of our margins part.
Yes. And one more question. Where do you see Bikaji's market share in the organized ethnic snack space over the next 3 to 5 years?
So we see a double-digit market share in next 3 to 5 years. So maybe around 11%, 11.5 kinds.
All right. Thank you. Thank you so much, sir. Thank you.
Thank you. As there are no further questions from the participant, I now hand over the conference to management for closing comments.
Thank you everyone for taking time out and being part of this call. Hopefully we could answer the questions what came up. Still anything left out, we'll be happy to revert back. You can reach out to our corporate affairs person, Pratik, or the agency, and we'll revert back to the questions, anything left. Thank you very much.
Thank you. On behalf of Bikaji Food International, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.